Okay, good afternoon. You're watching the newsroom right here on ET Now. I'm Ajay Sharma. The markets are showing a very sharp recovery from the morning lows. We are comfortably above the 19,200 mark. Bank Nifty will also come up here on the screen. What is interesting today is that largely it's the large caps which are leading the recovery. Bank Nifty comfortably above the almost the 43,000, back to 43,000, and small cap, mid cap indices will also come up on your screen. Today, the rebound from the morning lows is soft as far as the mid cap, small cap is concerned. Look at that, just flatline, and small cap index is still in the red. Jitendra Sriram is joining us to talk more about markets. Jitendra, afternoon. Lots to talk about. Let's start with, I want to understand from you, first of all, do you think this reluctant correction which was seen last week, this marks a kind of a bottom in your view? The valuation got adjusted enough, or do you think that valuations were stretched and it was a smallish and shallow swift correction? They've not corrected as much as one would have wanted them to.
Good afternoon, Ajay, and good afternoon to all your viewers as well. So, coming to your point about the market correction, I would say, see, the broad point is that valuations for India now are very, very reasonable. In a sense, it is in sync with long-term averages. And if I look at even the earnings season that is currently underway, on the Nifty, for example, almost about three-fifths of the company have reported. And what we are seeing is a very, very robust earnings growth. We are seeing almost something upward in the high 20s kind of a aggregate earnings growth that has come through. So I think the momentum, the underlying economy, and as such, everything else is fairly hunky dory. What I would be worried about, and I think that is what could potentially cause even a future ripple, I would think is something like what is happening in the Middle East, especially this Hamas Israel kind of a thing, because that has implications on crude, on geopolitics, and various other things. I think market will take cues from that, but otherwise, as remains our fundamentals, the intrinsic growth in the economy, I would be very comfortable getting into the market. The only thing is this aftershocks or the tremors of this geopolitical unrest, to label it such.
Fair point. I mean, one could never take a call on which way the geopolitical matters will actually tilt. But how the observation on the earnings front, the early flavors which have started coming in for this quarter, are you comfortable with the universe of stocks which you guys track?
Yeah. So I would say there are a couple of interesting points I would like to highlight there. The first and foremost being that at an aggregate level, it is very robust. So as I mentioned, for the Nifty, almost 60% plus companies, maybe closer to two-thirds of the companies have already reported. And what we are seeing is kind of a high 20s kind of a earnings growth. So it's fairly robust. It's in sync with what analysts were expecting and all that. If I were to draw a slightly more nuanced breakdown into that numbers, if I look at the large sectors, things like banks are growing at roughly about the 20% ballpark. When you look at sectors like IT, which is probably the second largest weight in the Nifty, I would say that has been a little bit more tepid. That has been more in the mid single digit kind of a range. Other than that, I would say that if I look at the domestic facing sectors, specifically names in autos, names in capital goods and all, the growth has been fairly robust. So if I were to take a broader cut of the numbers, I would say the domestic facing economy has done fairly well. Export oriented sectors probably a little bit more leaner on the growth side rather than the domestic facing sectors.
Jitendra, Cipla in its commentary in the con call raised growth guidance. Now, industry leader player like Cipla raising the guidance. How do you rate that point? They're calling 23-24% kind of growth coming in now. And would it not apply to the entire sector, the tailwind which Cipla is seeing?
So I think the more fundamental point that is happening in the pharmaceutical space is that markets have generally been budgeting a kind of a double-digit attrition in the US generic space. Whereas what we have been seeing in terms of the actual delivery is that the erosion in pricing is more contained around the mid single digits. So the price falls have been much more muted than what people were expecting. And that is a tailwind that should impact, as you rightly say, the entire sector positively. So anybody who is exporting into the US, the generic space, should see that benefit coming through. And the local market also, do remember that the monsoon quarter typically is a little buoyant for the chronics and various other monsoon related ailments that come with it. So I would say though that segment anyway tends to be a little buoyant in Tokyo.
Mid-cap IT, that is something I want to get your thoughts on. KPIT also just half an hour back raised guidance at a time when all the other large cap IT stocks are witnessing growth pangs. Does that area look attractive to you?
So selectively, yes, and I think the debate that one needs to have between the large and the mid cap, I think the large cap, the challenge is one of growth. What you're seeing is at a large, size that the large cap techs carry, whether they can deliver a growth that is superior to the global growth rate, which may be even then a little bit more muted than what the domestic growth is like. I think the mid cap, where one needs to be a little selective, is that there is a challenge coming from the valuation space. Some of the mid caps are now trading at valuations which are far higher than the large cap. So unless it is compensated by the growth differential, then one can justify that kind of a valuation. But otherwise, one will need to be a little cautious. And that's why it's not that I would say I'm negative on the mid cap, but I would be a little bit more selective at this point and giving a lot more premium on where I see the robustness of growth being far more intact compared to say names which are a little bit more wobbly on the growth front.
Where else have you been raising your calls on? I mean, in the last 1 week, or if you do get a bigger cut going forward, where would you like to? What are your watch list looking like right now?
So broadly, I would say 1 week is a short time, but let me take the same question and extrapolate it to say probably the last quarter or so. I would say the areas that we have been adding exposures to, one would be say the automotive space, because clearly that's an area where we are entering the busy festive season now. And we do find that on various parameters, one being the raw material side, you're seeing some savings come on the raw material cost push. Second, we are also seeing some relaxation coming on the semiconductor shortage that was ailing the sector last year. Plus, you are also seeing the impact of some small growth pickup also coming there. So all things together, auto has been a sector that we have added exposures to. The other one I would say is the capital goods space, which has clearly been seeing a lot more of heavy order inflow coming through. So whether it be certain government spending oriented areas, which could be areas such as power or railways or defense, those are areas which are largely where the customer is largely the government, whether it be center or state, or it could be areas which are seeing some kind of a capex uplift. It could be driven by stuff like PLI, or the things that people in the market normally talk about, China plus one or Europe plus one or whatever. So we are those are two areas that we have added to. The other one where we have made some marginal increases is also the kind of momentum that we are seeing on the power generation demand. So utilities has been an area that we have also added a little bit of weight on, because we are seeing the traction in the energy demand continue to stay robust, and also there is an added trigger from their push towards renewables.
Right. All right, Jiten, we'll let you go on that one. Thanks so much for joining us on the show.
Thanks a lot. Thank you very much.